I hope everybody had a good holiday and Happy New Year. If I don't make any other videos, I'm just looking at Cardano right now, and I have the Fibonacci drawn on here from this swing low back in July up to this swing high in September. So we couldn't hold the 0.5. We broke wick right down to the 0.5. That was kind of a warning sign, and we did come back and test it. We held it. Another warning sign, we broke through and we couldn't stay above it. We had this long wick kind of pushing us down. There was a lot of fear in the market, and you know, now we broke the 786 back here. We had this big candle, and we didn't do a full tracement yet, which is still in the cards. So you got to look at both sides. You don't just want to look bullish or bearish. You want to look at everything and be prepared for anything that happens. So we're right on that 786. It's exactly where we would think we'd get resistance when we start getting momentum back to the upside. So we got to get above that. We'll see how we play with that. This is an interesting indicator from Crypto Crew University. It's designed by them. It's moving averages based off of the Fibonacci, which is very powerful. I'm also using the Fibonacci here. So you can see that this line, this white Fibonacci moving average, we're actually holding support on it right now. So if you look, you know, if we hold support, if we break through one of these lines, we tend to test back down to the one below. So we couldn't hold the orange, we're testing the white. We couldn't hold the white. We did get back above it. We got to see how we play with that. But this, on this move, retracement, you could see that we could get rejected, and if we get that back down below this white, then you know it's possible we play with that dollar level. And you're not trying to time the bottom. If Bitcoin's holding strong, then that might be a good entry as well. But my worst case, as long as Bitcoin's strong and the rest of the market is looking okay, would be around that. You know, this is going to move up over time, so you know, maybe around that 80-cent mark. You don't want to put your order in down here necessarily, because it might not get filled if you're just wicking down. So, but we'll see how we play with this. Again, if we can stay above this white, that'll keep us strong enough to see if we can test this 618 level at $1.82. Now, I kind of want to show on the downside retracement. So I'm just going to get rid of this one. See, we're actually, when you zoom in, we're actually just barely holding support on the 786. So, and we do have a long wick here. We got to see how we close on that in 6 hours. This is a 3-day chart. So it's not mega big picture, but you're not looking at the 4-hour hourly, like trying to, or even lower, trying to day trade, like, you know, but you shouldn't be doing that unless you have many years of investing and trading and swing trading experience. You shouldn't even attempt day trading. I know they make it look sexy, but in reality, you're just going to get wrecked. Better to just be in the long term. And so we're going to go here from this swing high. You can see that right on that wick. I'm going to take it from the wick to the swing low here. So swing high is just, you have a candle at the peak, and you have the candle, 2 candles to the right that are lower, and 2 candles to the left that are lower, and that's a technical swing high. And again, on the downside, you have this low here. That one went a little lower than this one, and this one's still lower. And then on the left, same thing. higher, in this case at the bottom, I'm sorry, for a swing low. But you get what I'm saying. So this, looking for the move to the upside, you can see where smart money is going to take profits. And not that they're not going to take profits up here at $1.72 or even before that. You can see we have a lot of confluence back here. But, you know, at this $1.90, we could get a lot of pressure. So at this Fibonacci 382, and it does correspond with a lot of historical levels. Even this breather on that crazy move back here. Whoops. So I'm looking, if we can stay bullish, to test this about $1.90. We get a wick. And we got to see if they release their back end solution, and all these projects that don't need that start to get released, and hype starts getting back in, and you know, all the moon boys are screaming, you know, but they won't start yelling until it's up here, and that's probably too late to really get that move. So, you know, you want to be early. You know, it's better to be too early and get out too early than try to time things and just chase hype. And usually by that time the momentum's already maxing out, and you want to exit or just forget about it, turn it off, and wait if you believe it's going to last. So, which charts? A lot of these. So, this is an update on the monthly log growth curves. We are currently holding support on that orange Fibonacci. So, that's looking bullish in my opinion. So we broke below it here. We were able to get back up above it. We couldn't break the blue. We broke the 50% level, and now, you know, we were able to test that for now. We still got 5 days and 7 hours left. If this even goes higher by then, like say 54, and we have this longer wick at the bottom, you know, we could look at something like this move again. Because look at that, look at these wicks, all that buying pressure coming in at those levels. But we got to see, we want to hold that 40,000. If we don't hold that, we could double bottom down here at 29ish. And we got to see, if we just wick below 40,000, we don't care. We don't want the body closing. This is the bull market support band, the 21 EMA, and right now we're holding resistance on it. But if we made that bullish monthly candle and we get above and close above the 21 EMA and confirm it as support, that's looking mega bullish for Bitcoin, and Bitcoin could start to pull some of its dominance back. You know, we could come down and test that 37 for now. I don't see this low breaking right now. In the future, of course, because there's going to be more and more assets that are coming out, and there's going to be some of them that are good and being used, but you know, most of them are going to be garbage and they're going to die. Especially when they have these bridges where people can just transfer their assets from one chain to the other. Some of them are going to die real quick in the future, even the good ones. If something happens, you don't know. But it'll be interesting to watch, that's for sure. But there'll be different chains. Some will be better for different things. One might be better for gaming, DeFi, and other ones for supply chain. You know, there's different protocols that are going to have more strengths. You know, Cardano is trying to do all of it, and they're methodical. They're not putting out anything that they don't believe firmly and is not peer reviewed to firmly, you know, show that the code is legit. So they're not rushing to get stuff out. They don't care about being first. They just want to be a chain that's helping people and stuff like that. So you should do your own research. I'm not really explaining it correctly, but Cardano is holding that 2% for now. If we break that, we could be seeing those other levels that we were talking about. You know, go back down to the 100% retracement, maybe even below. Back down, you know, to the dollar, to, you know, that 80-cent level we were talking about. So I hope everybody's well. Happy New Year. Take care. Nobody's out there now. The water's pretty murky. It just rained yesterday. So we'll see how it goes. Somebody got killed by a shark a little north of here on Christmas Eve. So blessings to their family. Take care, everybody.